everybody enough time to get on board. We're going to talk about the indicators that are currently on my chart real quick. We have VWAP, and the settings are going to be on the inputs, just band multipliers number 1. On the style, just VWAP, change to the color yellow. No upper and lower band or fills. Second EMA is going to be the 9 EMA, a fast EMA. Color is irrelevant, you can pick your own, but these are my settings. Next one's going to be the 13 EMA, and again, color can be your own. These are just the colors I picked, and these are my settings. 21-day EMA, again, same thing. Color can be your own. These are my own settings. Last one on the EMAs is going to be the 50-day. Again, same settings, colors your choice. Then we have key intraday levels. These are your markers. These are where you should be trading edge fades, meaning you get near one on the top. If it rejects, you short. If you get near one on the bottom and it rejects, you go long. Simple as that. I have no other indicators on my chart, and that is it. So we're going to start with an introduction to scalping. Scalping is not day trading fast, right? It's precision trading. We're not trying to predict the market. We're not trying to catch tops or bottoms. We're not top ticking, bottom ticking. We're not trying to be right all day long. Our only job as scalpers is to extract 15 to 20 points, maybe more, when the market shows its hand. That's it. In a perfect world, a scalp should literally take 3 to 5 candles. It should move clean. It should move immediate. It should feel obvious, and you should not panic or be stressed about it. It should be based on location plus confirmation, right? If a trade doesn't move quickly, it's not a scalp. It's a mistake. You get out fast. And that's why we look at the EMAs, right? A lot of people don't understand what scalping is and what it isn't, right? Scalping is trading reactions at a key level, entering after confirmation, using tight risk, taking profits quickly. Scalping is not chasing candles, trading chop, sitting in drawdown, hoping it comes back, right? It's very simple. If it doesn't go, it's a no, right? We want immediate results. We want to instantly be green, or we want to instantly be out. A little tougher to do in Asia, requires a little bit more patience, but if you apply that theory, you're going to find much more success in winning trades and keeping your losses small. Using the chart that I have up, right? We have the NASDAQ NQ 5-minute time frame. We went over my indicators. And look, this is what the market just did. What did we do here below the 50-day? We had a hard sell-off, right? Volume spiked. It was forced liquidation. And it created this level. But look at what happened after, right? Pretty much will immediately reclaimed price back over VWAP in the 50-day. That's a strong bullish displacement. Especially these candles. These are all bullish displacement candles. These are paramount into a scalping strategy. Okay, so we understand that we're seeing things predominant to successful scalp trading. And what we look for is, look, everybody's thinking downside target, right? Everybody's looking at this chart rolling over thinking, nope, downtime. Well, guess what? This isn't a downtrend. It's a reclaimed auction between buyers and sellers, right? Once price accepts above VWAP, which is the yellow line on my chart here, shorts become reaction only and longs become pullback based. Does that make sense?
Mm-hmm.
Anybody have any questions? So, my guidelines for scalping candles, right? This is what I try and teach anybody that follows me when we talk about scalping. The first thing I look at is candle quality, right? And I want to see candle quality. And what that means is large candles, right? Large candle bodies, minimal lower wicks. The minimal lower wicks is key, okay? And I want to see consecutive closes up. That's momentum. That's not noise, right? What I like to avoid are the long wicks on both sides of the candle, or alternating, red, green, red, green, red, green. Those are what you want to avoid. And you also want to avoid EMAs that are flat. These are not flat, these are pushing up. The easiest way to remember looking at your wicks in your candles is just remember strong candles tell the truth, the wicks tell the
Huh?
lie, right? You got a hot mic.
Sorry.
Well, that'll go to editing to get chopped out, but oh well.
Uh,
Alright, so back to. Now that I edited that out, this could be a two-part video. So back to the EMA behavior, right after the candles, we understand that wicks are liars, bodies tell the truth, and right now we're in the middle of a bunch of noise.
mhm.
If we look at our key levels, and we look at the key levels here and here, we can tell we're roughly right where? In the middle,
Right
right?
in the middle.
What's the one basic rule of trading? Don't diddle in the middle.
Middle in the middle.
We're in the middle.
Yeah. So right now, we have a low probability of a decent scalp setting up. Okay. Um, EMA behavior, right? Pullbacks are holding the 9 and 21, which are these two here. We don't see any closes below them, right? Price is staying above VWAP ever since we reclaimed it. Y'all see that?
Yes, sir.
And the 50 is right in bed with the VWAP, right? When price accepts
It's like
above
if it came
VWAP,
back down there,
right,
take that sucker.
right. And when price accepts above VWAP, VWAP becomes the floor, right? So if we're looking for a long scalp, we want to reclaim, which is a right. We want to reclaim VWAP in the 50 day, and we want to enter on the pullback where we retest, right? We break, we retest. Same language. EMAs are stacked bullish. You got the 9 over the 13, over the 21, over the 50, right? None of them are commingled. None of them are pointing flat. None of them are crossing. That is all bullish signs. That is all your signal right here to extremely be biased against any kind of short position, unless you are up against a key level. Okay? So at this point, once we get this reclaim and retest done, we get another push up, another retest, another push up. at any point you can use the 50 and VWAP as a point to enter. If a candle breaks and closes below or even wicks below, get out of the trade. It's pushing lower. Even if it fakes you out, wait till it closes above the next EMA to try and get in again. Make sense?
Yeah.
The best setup you watch for is when you break away from, say, the 9-day and you get a very small bearish pullback, a very small bearish candle, not engulfing, right? Comes back and retests the 9 and the 13. The 13 is the easiest point for you to enter. If you entered here at 86.50 by the next candle, you are already up at 902.50. How many points are we aiming for when we're scalping?
15.
10 to 20. Right?
Okay.
So right here, perfect example. Even right here, perfect example. Right? We retested these EMAs. So it's very easy to see what the expectation is here. Whereas if we go back here, see the wicks, small bodies, these are not scalping opportunities. If you weren't in up here and you got out down here, all this will shred you. Everybody see that?
Mm-hmm.
Again, not great scalping opportunities. Small bodies, big wicks on both sides, not great. Where do we start seeing the great scalping opportunities? Minimal wick on the body, big bodies, equal wicks, right? We're reclaim, retest, reclaim. Now we're getting into small bodies. We're leaving more wicks. We're in a consolidational phase. There's no reason to look at a scalping setup until we see a candle like this present, either up or down. And typically what's going to happen is we'll see a candle like this if it's going to be to the downside to retest one of the EMAs below or VWAP. And if that retest pushes down and immediately fires back up, that's your opportunity to enter, and you hold it with that 10, 15, 20 point target. If you get that target and you have profit locked in, my advice is leave your profit there and let the trade run. If it gives you more, trail it up every 5 or 10 points. Don't let it get so far ahead of you that if it round trips you to your profit that you have locked in, you take a hit to your drawdown, right? We don't want to give money back. So my advice, if you catch a runner from a scalp, then don't put a hard target on the chart. Trail it up every 5 points. If it comes back and gets you, it's just extra that you were not planning to get anyways. Make sense?
Yep.
Any questions?
We're avoiding this area right now in particular because the candles are short.
Because you have well, you have wicks on tops and bottoms of the candles, and price isn't really going anywhere fast, right? We want to
Okay.
see movement fast. We want to see expansion fast. We don't want to enter at the bottom of a candle and have the next candle open and push down to test that same bottom and take us out in profit, right? So we need distance between the candles so that when the next candle opens and there's no wick overlap, if you entered long here, right, and these candles push up, you're already in that much profit. There's a very, very low likelihood that a candle's going to come back down and round trip your entry and take you out. So that's why I mean tight stop losses, and if it doesn't happen fast, you get out of the way. Same thing here, right? 3 candles puts you up over 20 points, 15 minutes flat. Not the greatest candles, right? But none of them, if you entered here, came back to retest your entry. Now, if you would have tried holding this and you got in here at this breakout, guess what would happen? You'd have got round tripped and stopped out at break even. That's not a bad thing because you didn't technically lose, but it is a bad thing because you left all this profit on the table. So until you guys get your prop firm accounts over that $2,600 threshold, this is the safest way for you guys to build buffer and strength on those accounts and help pass them quicker, right? Because you're not going to always be here to watch for these setups that will pass an account in 1 5-minute candle. So small body pullbacks into an EMA, right? Strong bullish confirmation candle breaking out, and you enter the break of that candle. So we get a small bullish or small bearish pullback candle, and the minute that candle becomes an engulfing candle, we place our entry at the open of the next candle. And if I see that set up, we'll actually demonstrate it live here. Typically my stops are 3 to 5 points when I'm scalping underneath. If it gets hit, oh well, I wait for the next opportunity that prevents itself. First target's going to be 10 points, second's going to be 15, third's going to be 20. If I see momentum and the strength of the candle running further, I'm going to let it go. I'm just going to trail it and take as much as it'll give me, right? What we don't do is we don't chase the strength, and we want to try and buy the reaction to the value, right? So we want to wait for that candle to confirm. We want to wait for an engulfing candle to close, and then let the buyers tell us that next candle when we enter is the one that's going to pay us. That's what I mean by we don't chase strength, we just buy reactions to value, right? Second continuation or second strategy for scalping, higher low above VWAP, EMA still stacked bullish. Bullish engulfing candle after any shallow pullback, I'm entering long, period. Right? My entry would be the break of the confirmation candle. So, anybody have any questions about that?
You said bullish engulfing candle after a pullback?
Yes, sir, after a shallow bearish pullback. So that would look...
Like where?
Let me see if I can find a good example for you. So do we see here how we're trading above and all the EMAs are spread out? We have a shallow bearish pullback, right? As soon as this candle breaks down, this candle impulses, so we have a confirmation of a floor, right? We have a continuation of a floor. Here's the retest, right? This is the guy you're waiting for. You're not trying to get in here. You're not trying to get in here. You want the guy that comes down and says, guess what? The floor on the board is exactly where it was presented. Tops here, right? Wicks here. So we had two parts that this was retested on, okay? With that first shallow pullback into here, right? Tested the top of the wicks, tested the top of the bodies on this double top here. Okay? And this is relevant in terms of structure if you want to scalp for a trade that leads to that kind of explosiveness. Right? Everybody is always focused and hyper focused on trying to get that trade entry all the way down here. Right? That's not our job. That's gambling. we want to enter with the confluence that we have broken resistance, we have established support, and then we retested resistance and confirmed it as support. And that's the trade we enter, right? As soon as this wick pulls up and gets above this candle, that's our breakout confirmation. We enter this trade long right here. So we let this candle push down, right? And then as this candle is reacting and buyers are telling you what they're doing, this candle comes up. As soon as it breaks that original breakout candle here, we enter. And when we enter here, we take that trade all the way up to here.
Got it.
Everybody see that?
Yeah, I'm tracking.
Okay. That's a trade that will definitely pay you a lot more than 15 points, but it also involves some knowledge of structure, right? You have a double top over here that failed to pay. So you had two rejections creating a zone. I wouldn't even call it a level. I would call this a prior resistance zone that flipped into current support. Just because we have lower, higher, and lower tests of that particular level. This is where I say putting a line in the sand can sometimes hurt you versus help you. So always try and keep in mind support and resistance should be viewed as a zone, not a hard line on a chart. It's your job to find the most logical point in that zone, the one that has the most credit to give the most reaction. Anybody have any questions so far? Now look, right now, we just printed a nice big candle, right? So if this candle becomes a shallow pullback and stays within one of these three EMAs, this is a perfect entry for a scalp to the upside. How am I looking at where this candle should pull back to? I'm looking at the tops of the candles where it flattened out, right? So if I put a line across here, this is visually what I'm watching for. If this pullback doesn't break below these candles, then I know it's a retest and the continuation is going to be bigger.
Do you
Now,
consider that a retest of the top of the flagpole?
I'm not looking at flags right now, but yes, that is a potential, right?
Sorry.
I would say that the top of the flag here at the 896.75 deserves a valid retest. This is almost close enough to count it as good, right? Because we're looking at zones, we're not looking at hard lines in the chart. So
Yep.
this, right, if you're talking about a flag in terms of scalping, this is your pull. Price never came to the 50%, right? It was defended heavily by VWAP and the 50-day. So you got close enough to call it good. So now you can identify a target, right? An upside target by simply drawing a line from the top to the bottom of that move and then putting that move at the 50% line down here. And that will tell you where that price should travel to. If that flag holds and it pays out, this would become your target. And we get that by measuring these 1, 2, 3, 4 candles. If there was another candle that had a higher push before this retracement, we would count that too. Okay?
Sir.
And this fits perfectly, right? We got 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's a little overextended. I like to see 6, 5 to 8 candles before a breakout on a flag, but 9 is acceptable. It's moving in the right direction, right? So this
Hence
candle,
my comment.
yeah, this candle that completely dojied out was your retest to get this trade going in the long direction, right? And now look at the candles opening up. Right? We're not seeing the little stuff here. We're seeing body. Body. And so if this price comes back down to this initial candle open, I'm going to leave it right there. 7 contracts with a stop loss. I'm going to leave $175 stop loss. And my profit target would be up here at the flag. So I'm risking 175 bucks to grab 2700 in the next 15 minutes. Now let's say this candle collapses but does not come down to pick up my order. If it gets close enough to this candle top here with no wick, I will push my order up into it. But I will wait till there's very little time left on that candle. If it's not looking like it's pushing up in the last minute of that candle, I'm not pushing anything. I'm not going to chase it. I'll wait for the next one. Because if you look, it doesn't take very many candles to come back down to the fast EMAs here. The 9, the 13, the 21. You usually get 3, maybe 4 candles above it before it retests. And in this situation, if we're in this trade, our stop, if we want to give it room, only needs to be below the higher low, right? So this is where you think higher high, higher low. And you keep that mantra in the back of your head. So our entry should be here at the break of this confirmation candle. We're looking for 15 to 20 points. We would have entered that at 905. This candle's gone up to 912. So it's hit half of our target just in one candle if we were in the trade. You guys understand what I'm looking at now?
Mhm.
Undulations, that candle breathing up and down is normal. What you need to pay attention to is the last 20 seconds and where it closes. If it leaves a strong close, which is a body close to the top, that's a green light for the next candle. If it does this and leaves a strong wick to the top, that's where you're either at break even or slightly in profit, because the next candle is most likely going to push down before it goes up. If you didn't just get out of the reversal. Okay? But you'll go back and look, you'll see a lot of candles that leave 50% wick, 50% body, and all of a sudden you print this huge breakout candle. So always be diligent, right? You just need to be under and manage appropriately. You need to be able to react fast. And again, we're 40 seconds left in this candle. We still haven't done anything to add to a bottom wick. So there's a high probability this next candle, because price keeps getting pushed down hard, could explode up to get through it. This is what we call compression on an individual candle basis. And you can pretty much well identify compression very easily, because the price will not push down and go from a green to a red candle and set a lower wick, it'll stay flat and the price will just continue to push up and down. And now let's see if this was correct compression. If it's compression, this candle is going to be somewhere up in the 918.50 by the time it hits extension. If it's a failure, it's not going to break this candle and it'll leave a wick and start pushing down. Anybody have any questions? They feel like they're missing anything so far?
Yes, sir.
Perfect.
So you didn't push your order into the candle, I see.
I did not, because we didn't get close enough to where I felt the value was there, right? And we also know there's a high potential of a retest at the top of that candle. So if this is the base of a impulse leg coming, that order is going to get picked up. And it's going to reverse and go the other way. If it doesn't, guess what? I'm out $140, but look, I'm already instantly green. This is what a scalping trade should look like. It's $420 using max contracts on any eval. Now we're up 630, right? I'm not going to let that run back on me. I'm already locking in. This is the one time I will say, if you practice scalping and you get good at it, you can do it on an eval and leverage your risk available without hurting your account, right? And I want you to understand that that requires a lot of practice on a paper account before you start putting your accounts at risk doing this. It takes $3,000 to pass an eval. All you got to do is hit 10 points with max contracts, I think 2.5 times. Now, do we see
The hell of a scalp, Danny.
well, I mean, this is the whole point, right?
100%.
That's a bottom tick entry on a candle. It's not a bottom tick entry on the structure. But when you're scalping, this is the behavior you need to look for. This is what has to be present in order for you to be successful. And it's dawned on me that in a year of running this Discord, I don't think we've ever talked about the value and why you guys see me in trades that maybe don't make sense to you, right? And this is primarily why here.
Jack, gotcha. The secret sauce.
Well, I mean, I don't know if it's more secret sauce than it is just my knowledge depth for getting to show you guys some of the most basic steps to help build an account. I'm more
I
focused
appreciate you going over it. Thank you.
I'm more focused on trying to teach you guys how to do, 1-2 trades a day that will limit your exposure in the market and not really focus on this part, because this is a high level of skill, right? It does take a lot of individual candle knowledge, a lot of being able to identify things in split seconds. And
I
so,
could see it being a real good thing and a real bad thing for certain personality types.
right. and it's also it takes a very good discipline on knowing when to deploy it and when to avoid it, right?
Yep. Just
And
like you were explaining.
right. So this is why I don't focus on this a lot, but we are going to start including it moving forward. Um, just because, and when I see that right there, I will lock up as much profit as I can. So right there, we just made 560 bucks in a minute and a half. You only need to do that 6 more times or 5 more times in 5 minutes to pass a 50k eval, right?
And the biggest question I have is how much of your drawdown got taken?
If my drawdown was taken out of that, it would have been taken. Let's see, what was the high? 980 bucks, and I closed it out for 560, so about 400 bucks.
Right.
So as long as you're taking more out, right, than your drawdown
Oh,
is given back, it's not a problem.
not at all.
And this candle, when I see them open high like that on a wick and immediately push down, that's just an invitation for me to find a better entry and get more value. And what I mean by that is if I look back here, we've already gotten quite a few candles away from touching one of these EMAs. So now again, I'm going to be looking at the top of the candle here, and I'm going to be looking at the EMAs down here. Which one's got a higher probability? Well,
Like,
guess what? If this candle were to close as is right now, that's a bullish, or excuse me, bearish engulfing candle. I'm not looking at nothing. Right? Now I'm looking at potentially short side bias trades. But right here, we're already close to a level that is a pivot point. I do not want to grab and trade a pivot point. This is most likely going to be a stronger retest of your flag.
let's touch the tip of the pool.
This also could simply be a whipsaw that is forming to take everybody out of the long. This would be the liquidity sweep required to continue the trade up to the target.
Just hear the market saying thank you for your stop and your stop and your stop.
It's saying thank you for your participation in my liquidity hunt. So right here, right? Let's say our we entered up here and our stop was below the recent lower high. Well, that would have just taken us out. That's why I can tell you it is a definite liquidity hunt, right? Because everybody knows if you're scalping, including the market, your stop would have been right here at 905.50. That price came right down to 905 even and took everybody out by 2 ticks, right? So higher lows above VWAP equals long only scalps, and we are still above VWAP. Okay, let's talk about why I'm not shorting this, right? Shorts taken above VWAP, shorts entered into momentum, no acceptance below VWAP. A short without acceptance below VWAP is just a guess, right? You're guessing at a pullback. And that's critical that you don't guess. So I have a rule of thumb. If I'm scalping and that yellow line is below me, I do not short unless I see a structure that says this is breaking down. And that would be a very clear double top or head and shoulders pattern. That is where I would agree with a short entry. But then again, I'm also using VWAP as a confirmation to get under it before I enter. And if you'll notice, in a lot of the patterns we trade that break and flip structure from bullish to bearish, we don't really get any big payouts to the downside unless we are breaking under the 50 and under VWAP. Everybody agree with that and think back a little bit on some of your previous trades and agree with that?
100%.
Yeah.
50 days dynamic support resistance.
So this is where it's tough as a scalper, right? It looks tempting. It may look like it logically meets your requirements. Problem is, why is it structurally wrong, right? So we always have to keep that in mind. Right here, we set a lower low and a lower high for the previous two candles. That to me says I'm not taking a trade, period, till we get confirmation above this candle or below VWAP. This is my basic rule of thumb on 3 to 5 candles. If price is expanding and you're trading distance, not time, you're in the right trade. You hold it. If the price stalls, you reduce your risk. You either move to break even or into profit, right? If price wicks both sides, you get the frick out of the way. Scalp should feel fast. If it feels slow, it's wrong. Period. If it's not moving, you're not in the right trade. Let's talk about when we don't take a trade, right? When we don't take trades is when you get price doing exactly this. Chopping through EMAs, get it stuck or sitting around VWAP, very much like this, right? What's the one thing you notice about this section right here? What are the EMAs doing? What's VWAP doing?
They're flat.
They're flat.
All in bit.
They are all flat. They have no arc. They are going nowhere. This is what you don't want to see. This is why we use short and fast EMAs. We don't use them to tell us, oh, hey, shit, we should be going long, or hey, we should be going short. We say, is price moving good enough to support scalping? And this particular combination works very well at doing that. And now look, we can still be mildly flat, but trending up. And this is a situation where unless your entry is somewhere like this, right? And look, these are my trades, guys. This is my entry here at a breakout above this candle, right? You can see that denoted by the arrow on the side of my candle, right? My profit was taken here. Y'all see that? Now look, there's another entry. Here's another entry. Do you see where my entry short, I got out here. My entry long, excuse me, I got that backwards. I was short till here, and I took the bounce, candle came up, I took my exit. So I scalped the wick of the pullback on that candle and got paid from 647 all the way up to 673. That's scalping. You don't see an arrow down here. You don't see an arrow, well, you do see an arrow up here because I scalped that candle and then got stopped out with this one. So, and then the market closed. Anyways, the whole point is we need confirmation, right? So when I do nothing, price is chopping through VWAP, EMAs are flat, candles have long wicks, and price is extended far from EMAs, right? We're getting further away from the 50 and further away from VWAP. We're not too far from the 9, 21, and the 13. So that doesn't have me panicked at all. Hasn't been very long since we retested the 13. So always remember, no trade is a position, right? When there's not a trade to be had, no trade is a position. So I'm going to just break this down quick, right? Long scalp checklist. Got to be above VWAP. EMA stacked and bullish, meaning they have to be on top of each other chronologically, meaning the 9-day should be on top, 13 days should be below the 9-day, but above the 21-day. The 21-day should be on top of the 50. The 50 should be below the 21, the 13, and the 9, but yet above VWAP. Okay, that is a bullish stack. That is your confirmation price is trending up. Okay, it is a guaranteed easy path when you find a good entry to take 15 to 20 points all day long as these EMAs look like that. Okay, short scalp checklist. Price has got to be below VWAP. EMA stacked got to be pointing down in the same order, except for reversed. Okay, rejection candles must be present. Acceptance below VWAP, meaning we break below VWAP, we retest, and it rejects it to the downside. If I can teach you guys one thing about scalping, right? It's going to cover this philosophy. I'm not teaching indicators. I'm not teaching predictions. I'm not teaching hope. I'm trying to point out location, candle confirmation, fast executions, and fast exits. Okay? Anybody have any questions about that?
Down here.
Man, y'all just get too quiet in here.
Was the last thing you said? So location, candle confirmations, fast entry, fast exit.
That is correct. The short list, as far as my philosophy goes, right? I'm not teaching you indicators. I'm not teaching you the predictions. I'm not teaching you how to hope trade, right? Hope trades are, oh my God, I see the big candle. I hope I get in for the next big candle. FOMO, right? You force a trade, you get burned. Look at what happens when you get a big run up and somebody's FOMOing in at the top. They get trapped and then they get wrecked. All just for price to go back and continue higher. And that brings, that's never happened to any of us. We don't possibly trade like that. There's no way.
Never do that.
And so I'm going to kind of finish this caveat here with an actual pattern trade. And everybody here knows exactly what I'm looking at, right? But we're going to make sure the people that don't know what we're looking at can see it. And we are looking at the letter W that these candles form. Okay? Once we
out with the bull flag, but I figured you were going somewhere with it.
Yeah, so once we establish that we see a double bottom pattern, looks like a W, right? Then we need to identify the neckline. The neckline is where price comes in the middle of the W and reverses to set the opposite side. So for me, I use the top of the bodies of the candles where the reversal occurred. It's like setting a level. This is called the neckline. Okay? And I'm going to label it that way so anybody that watches this video understands what we're talking about. Next thing I'm going to do is I'm going to measure how big of a double bottom this is. I'm going to go from the bottom of this wick right here, up to this neckline, straight up and down. And then I'm going to take that measurement and I'm going to put it right on top of that neckline. Right here. So that when price breaks up, comes back down, retest that neckline area, and we didn't get a full neckline retest because the EMAs and VWAP were above the neckline. Right? That's your number one confirmation whether you're going to get a full on neckline retest. Now if I put a line across this and I wasn't scalping and I was trading structure, here's my target, right? Let's mark that as a target. We'll write it as double bottom target. How long did it take price to hit that? Let's get rid of the retest example. Just looking at the double bottom structure and measuring from the wick to the body and putting that measurement on top of the neckline, we got a break, a retest, and a continuation that paid right to that target every time. When you get this scenario, you get a break and a retest, that target gets hit 100% of the time. When I'm trading this, before any of this happens on the chart, I also use a trend line very much like this. And in this case, it would have been very much like this. Because I know if I get a single candle close over this trend line before we get to that breakout and retest, this whole pattern has failed and I invalidate it. So a candle over here means no more trade. And that works both ways for a double bottom and a double top. And we do the exact same thing if this were a double top, which would then look like this. We still draw the neckline in the middle at the body of the bottom of the middle of the letter M, right? So now instead of a W, we have an M. This is bearish. This means price goes down. W means price goes up. Both these patterns have a 70 to 85% win rate. And it would beseech most people to learn that and learn how to trade them, because typically what happens when you see them print on a chart is liquidity becomes magnetic above and below. So you will now have a future target that is going to get retapped, and usually within the next couple hours. And it's that simple. Trend line, if it's going to pay when it breaks this neckline, it is never going to send a candle to cross that trend line on a double bottom. If it does, or excuse me, on a double top, if it does, you invalidate the whole structure. Price always has one job during the argument to do, and that is to retest the trend. That's why if you put a channel on your candles, you will see. Candle will go up, candle will come down. Next candle will open, go down, and then candle will come up. It is testing the top and the bottom of that channel of trend. And that's all I got for you guys this evening. Anybody have any questions?
what I can
Nope.
think of.
Perfect.
So like,
Hey, quick question.
Yes.
For that double bottom, when it goes into that zone where it's not supposed to go, would you get out on a wick or a close?
I would get out on a close, more or less, but if it's a deep wick, I'm already out, right? If it wicks down into it and it reclaims, I'll consider re-entering it. But if it pushes deep past the trend, I'm not giving it the risk.
Okay, sounds good.
Makes
And then if
sense?
you saw that,
What's that, Luke? You cut out.
if you saw that type of retest at the neckline and you saw the market coming back down to the neckline, would you contemplate taking a trade off that neckline again?
If I seen it come back down to it again,
Yes.
no. No.
Okay.
If I extended this out this way and price came back down to it, no. You have a much higher probability of going down to sweep the liquidity below the the equal lows here, right?
Gotcha. Yes, sir.
So the one thing I'll finish this with, right? Typically when I see double bottoms play out like this cleanly, what I see tends to always be something similar to this. You'll see a double bottom here, right? You'll see price come out, you'll see the breakout, you'll see the normal retest, the trade up, and then you'll get up to a point where you create a double top, right? And when you get that double top, price will come down and sweep the liquidity here, right? And let me see if I can find an actual representation of that on the chart lately, because it happens pretty frequently. Okay, so here's a pretty good decent, right? We got a little baby double bottom here, paid out pretty good. We make a little baby double top, paid out pretty good. So if I put a level here and I put a level here, these are areas I know that are going to be swept. Oh, what happened here? We swept it, right? Based on the double top that printed here, the equal highs, right? Look, price swept it. What did it do when it swept it? Left a double top, broke, and broke down. Okay? Double bottom here. Where'd that price go? Swept it. Are y'all starting to see this? Just based on this particular action right here. You get a double. Price goes up. Trade sideways. Leaves a double top. Price comes down, right? And then price continues to trade, compress, fade out, fizzle out.
Hey Danny, right there where you have that V on the bottom, is that a double top or a double bottom? Right there, would you consider that? That yeah, right there, the one on the bottom.
This right here, I would just consider an aggressive recovery, right?
Okay.
Because it's not really inverse head and shoulders, right? To me, if anything, it's more of a cup and handle, an inverted cup and handle that basically paid out later on, right? Except for it didn't pay out because it didn't drop where we would expect it. All this did was made the double bottom, the double top, and it swept, didn't get it, right? So then it got the liquidity on top, and again, double bottom, right? We swept prior liquidity from there. We print a double top right here, Guess what? We come down sweep liquidity that didn't get picked up down here from this move. Now, it is almost impossible without the presence of hindsight to see this happen, but the whole thing I'm pointing out is that typically when I see this structure, it's immediately followed by a double top, depending on the time of the day. Like this occurred in London, right? So consolidation was inevitable. But if this would have happened in New York, you'd get this move here, big move up, double top up here, big move down, sweeps, and it just kind of keeps doing that all day. See if I can find a New York session that actually shows that. I don't think we've had one in the last couple days. And not really, it's always been AMD versus any actual structure, so which means we're starting to finally move up in the market. But ultimately, that's what I mean about patterns, right? You print that double bottom, you're going to get a double top. And if you look at this particular scenario, there's another way. Oops, I didn't want to move that. There's another way to look at it. We had a big bull flag, right? So you now have two bullish patterns that coincide with each other, and you have a pattern inside of a pattern. So price target hits the first target on the double bottom. Boom, money in the bank, right? Bull flag, just about to be money in the bank. And looking at the reaction over here to the left, if we do not come through that zone with strength, price is going to flip, meaning we are going to fall back. We will probably consolidate up here, creating some sort of a double top and push right back down to somewhere in the middle around VWAP, right? We're going to go right back to the price where price is neutral. And then the argument between buyers and sellers starts all over again. Anybody else have any other questions?
Yeah, I have a question about the EMAs one more time. So we're not using these as an entry or anything like that, just an indication of whether price is moving.
So yeah, correct.
Right.
I mean, you can use them as an entry. Like the closer you get to one to enter, the better value you're going to have. But the overall idea is once you're in the trade, you use them to confirm your direction, right? Because what happens to these when price starts changing, right?
They start to converge.
You see them starting to change shape and point the opposite direction. Right? See how they went from pointing up and just sharply dropped and started pointing down, price went down. Right? Look at what happens when they sharply point up, price goes up. That's why you use a combination of fast and slow, right? When the slow EMAs, such as the 50 and VWAP, are still pointing up in the direction, there's a lot of bullish momentum. If these were starting to flatten out or these started curling and these stayed the same, you're just looking at a shallow retest.
Okay.
Okay.
Thank
This right here is iconically what you want to see in a bullish scalping scenario. You want everything pointing up, you want good separation between them, and you want them to track very smooth in the journey up.
Yeah.
Now, in my opinion, we're going to hit this flag target, and if we don't continue through with a candle close on top of this box, we are going to do exactly that. We will print some sort of bearish pattern or consolidation. We will have a breakdown that will return price back to its fair value area. then we'll have consolidation there. And either buyers or sellers are going to win. If sellers win, we are going to come back down and sweep lows below your prior equal lows. And it's just really that simple. And these, depending on what direction they're pushing, are going to tell you. Now let me show you something. Do you see how this candle opened and stopped pushing? But look at what VWAP's doing. Right? See how VWAP's flattening out? That's your first inkling that pressure is building to stop pulling VWAP because you're not pushing as high as fast. So when I see that, I keep an eye on that.
Okay, that makes sense.
What's that?
That makes sense.
Okay.
Yeah.
All right, with that, I'm going to say thank you to everybody watching this from the refugee camp. Find us on TikTok under Official Spots Gone Cleaning and Restoration. There is a free link to the free side of Discord pinned in my videos. Peace.